So we have started from zero and we're here discussing key levels today. I do not recommend using indicators. I would say 4 to 5 months past is good enough to analyze the key levels and find them for you. Hello, Elevation Trading Squad. Welcome back to another great episode with Elevation Trading Team. In today's episode, we're going to talk about two most important factors that determine if you're a good trader or a bad trader. Simply, I would say if you're a good analyzer or not. If you remember last week, we discussed trading technicals. If you haven't checked it yet, I highly suggest you go ahead and check it. Last week, we discussed trading factors as well. We had a balance on what factors are important in trading technicals. In today's episode, we're going to go into one of them and learn every tiny detail about that subject. You excited? Me too. Let's go and find out what is in today's subject. So, as you can see, exactly, we're going to talk about key levels. Today's subject is identifying key levels. It's in continuation of our Market 100 series that will eventually make you a good trader. So we have started from zero and we're here discussing key levels today. But before we talk about the main subject of today, I have 3 important points to tell you to remember anytime you trade, or before you trade. So what are those 3 points to remember? First, look for a good setup. And why we're going to discuss these points? Because it's very important and it's linked to our today's subject. So what is to look for a good setup? Looking for a good setup means that you would always look to determine key levels and start trading from key levels. Don't jump into trades from nowhere. If you remember, last week we talked about trading plan. Don't forget, stay tuned for our video about how to make a trading plan in our upcoming videos. But today, we talked about a trading plan, that a good trader has a trading plan. So usually, a good setup is a part of your trading plan. So always look for a good setup before you trade. If you don't have a good setup, simply sit on your hands and do not trade. Next, we have, the point is, do not trade every candle. So if you remember on our video, which was about charts that you can check it here, we talked about how many types of charts we have, or I would say simply in how many ways you can look at a chart. One of them was candlestick charts. Do not trade every candle. When you see a bearish or a bullish move, do not go ahead and trade that. We look for setup. We don't look for candles. And also, a very important factor to remember, or I would say a very important point to remember, trade within your account size. Simply, if you have $1,000 in your account, only trade with 10% of that. If you have $100,000, simply trade with 10% of that. Only risk 2% per capital, per every trade. 2% of your overall capital. Do not put everything. It's not gambling. It's definitely not gambling. You don't want to risk your whole trading account for every single trade. So, I hope this was informational and I hope you pay attention to them. But what is the link of these points into today's subject? So if I believe you remember still, we are going to talk about key levels. But what are key levels? Okay. That's my question all the time about any subject. So today my question is, what is a key level? And what do we mean by key level when we're talking about this stuff? So simply, Key levels are important technical levels at which a financial instrument could face increased buying or selling pressure. And that is exactly when a trader decides either to buy or to sell a stock or a currency or an index. So it could apply to literally everything. A key level is basically, it's a very important technical level. Don't forget, when we talk about a key level, key, that means that's a very important level. So whenever you're looking for key levels, those are basically technical levels that buying or selling pressure change. Depending on situation, if we have a bullish market, then it might start to, give you an indication that, okay, in this level, it's going to change to another direction, or it's going to change to a bearish market. Or if it's a bearish market, within certain key levels, it will simply tell you, hey, within this key level, which we're going to find out what we call that level, I'm going to reverse and become bullish again. So don't forget, key levels are important technical levels that buying and selling pressure change direction. And based on those important key levels, traders, I would say technical analysts, determine either to buy or to sell. Is that clear? I hope that's clear. But what are these levels called? So when we're talking about key levels, do we have any specific names for them, or it's just key level and we need to find them? No. It's very simple. We do have names for them, and those key levels are only two of them. There are only two key levels. First, we have support level, and second, we have resistance level. So now that you know what are these levels are called, what is the point of knowing them? What is support and what is resistance? Excited to find out? Stay with me to the end of this video. At the end of the video, we're gonna have live examples on live chart on how to determine these key levels. So now, what is a support level? Well, simply, in general, support level is the level at which buyers tend to purchase or enter into a stock or a currency. And usually, within that support level, the price rallies towards upside. Okay, a very simple example could be the example I have here for you guys. So look, when we talk about support, that means a level is basically supporting the price. It's all about price. So for example, imagine this is a bearish market, and when it reached to this level, it stopped. That means this level is basically supporting the price, not letting it fall anymore. Okay, so basically this is called a support level. Whenever, basically this is a place for buyers who are waiting for those levels to enter the market, and usually the market will rally toward upside. I hope that's clear. Stay tuned. We're gonna have a live example at the end of the video. But before we do that, what is a resistance level? Now that you know what is a support level, so what is a resistance level? Well, simply resistance, in these levels, the price of an asset meets pressure on its way up by emergence of or growing number of sellers whose wish is to sell that price. So simply, in support, buyers are waiting to long the market, or buyers are waiting for the bearish market to switch direction and go toward upside. So they wave that right toward upside. But when we're talking about resistance, that means a certain level. Avoid the price to go any up or to rise anymore. So, for example, look at this. Imagine this line, the green line, as a price as a price level. So for example, let's say $100. And imagine this line, a price movement toward upside. So certain levels that we're going to find out in our live examples, there are certain levels that price start to reject moving upward, or its bullish momentum. It reached to a level where buyers lose their momentum, or where buyers lose the control over the market, over the price increase. And there is a large number of sellers who are pushing the price toward downside so they could short the market. And those levels are usually called resistance. So for example, here, buyers are in control. They try to push the price toward upside, but there are more sellers than buyers. And how to identify these key levels, we're going to talk about them. We're going to find out at the end of this video on our live example. Just stay tuned. But for now, know that resistance are those levels that price of certain equity or a currency start to reject moving any further. And that's when the markets start to reverse. And usually, it crashes toward downside. And short sellers, or I would say traders who are looking for short positions, they are the ones who are looking for resistance level. But day traders like me and you, they can profit from either support or resistance. We can rally the wave toward upside, and at the same time, we can follow it through downside as the short sellers are basically waiting to short the market. But before we move any further, do we have the power as a day trader to change the direction of the market? The answer is absolutely not. So with the number of trades we get into the market, for example, 10 shares, 5 shares, 100 shares, that's not enough to change the direction of the trend. It's usually the institutional traders, the banks, or even the company CEOs who decide to do certain things to change the direction of the market. Or it needs a large number of trades at the same time to change the direction of the market. So usually what we are looking for, what is the point of identifying these support and resistance level? Because we want to be with majority. We don't want to be with minority. And who are the minorities? The minorities are the ones that cannot identify these levels, and they tend to go opposite way. So for example, as a technical analyst and as a good trader, we can easily identify these levels and we avoid going against it. But new traders usually, a lot of new traders make this mistake, and they think that as the price is moving toward upside, it might continue. But mostly it would reverse whenever it gets to certain important levels. So, is resistance clear? I hope so. And what are the best time frames to draw these support and resistance level? Do we even draw them somewhere? I'm confused. Yes, my friend, we do draw them. We need to draw support and resistance levels in our charts as a beginner trader. But as you're getting more and more experienced, you will not need to draw them. You will simply look at the chart and identify the key levels and wait for them. But as a beginner trader, or even as an intermediate trader, we would usually go to a chart and draw our support and resistance so our eyes could easily see and wait for the position so we get into the market. But what are the best time frames to draw support and resistance level? As a day trader, for me, daily to identify the main trend of the market, okay. I have been saying trend a lot of time. In our upcoming videos, probably next week, I'm gonna make a whole tutorial about trend and how we can use the trend. So that's also an important factor in technical analysis that we're gonna talk about them in our upcoming videos. But for now, best time frames to draw support and resistance. So for me, as a day trader, or I would say in general, day traders rely on daily time frame to identify the main trend of the market, to identify key levels, 1 hour to basically have a smaller picture, and then 10 minutes to enter the market. So simply, we start with big pictures, then we bring it into the smaller and the smallest. So we always zoom out and look for a bigger picture. Daily is what we look for at the beginning, or at the first glance. 1 hour time frame. Drop it to 1 hour. I'm gonna do it at the end of this video, so stay with me. And then as you're basically close to making a decision to enter the market, it would simply be 10 minutes. Clear with time frames? Now, indicators that show support and resistance. First of all, I do not recommend using indicators for identifying support and resistance, or I would say I do not recommend indicators overall, just a select number of indicators. But overall, do not rely on these indicators. But there are some that could simply show support and resistance. A very famous one is moving average. So usually there are different, I would say, views on using moving average. But overall, some traders would say, okay, whenever the price starts to decline, whenever it reaches 200 moving average, it will reverse. But we're going to talk about even moving average in our upcoming videos. But there are certain indicators that could help you determine support and resistance levels. The most famous one is moving average. All right, now let's jump into our live examples and see what we were talking about. But before I do that, first, can someone tell me if it's a good trading setup or if this is a good way to trade? Okay, so the answer is absolutely not. Do not be this trader. Do not be this trader. If you are this trader, definitely you're missing a lot. So when you have so many indicators, when you have so many basically stuff in your chart, it's simply getting so confusing. It's literally getting out of your control. Simply remove all of them, and especially some of the indicators. Some people simply create them for themselves. It might work for them, but it might not work for you. The simplest way to look at a chart is to look at a pure price action. And we're going to talk about that in our upcoming videos. But don't be this trader. Which trader you want to be? Be this trader. It's as simple as you can see. Because when you have this much information, it's much more than what you had in the other chart. Because now you can simply see all price movements very easily. So this is basically what you will come up to when you open a chart. Okay, so let's start finding our key levels in this specific charts. All right, so before we do that, the time frames that we're going to use is daily, 1 hour, and 10 minutes. And also, if you remember from our chart presentation, we usually use line charts on bigger picture. So for example, when we're going to daily, if you use basically the line chart, it will simply show you what are those key levels. So let's reset our chart. Okay, simply, key levels are very obvious levels that basically show us when the markets start to decline or start to exhaust, I would say. So look, for example, those key levels, those support and resistance levels are very obvious when you look at it in a bigger picture. So let's see. The lines that could help us basically identify them could be horizontal line, for example. Look, First of all, the highest of all time in NASDAQ chart. Look at this. Around price of 16,000, 16,586. That looks like a little bit of weird number, but I'm going to talk about how to make that easier for yourself in a bit. So for example, this is a very important key level. Can someone tell me if it is support or resistance? Very easy. I'm going to use red color for our resistance levels. So why we call this level resistance level? Can someone tell me? Okay, so simply that is our resistance. And the color, I'm gonna choose the color red as well. All right, so this level is resistance. Why? Because look at the market movement. It went up and up and up, and eventually, when it reached to this level, it rejected the price one time, come down, tried to move back to that level, price rejected one more time, and start to come down. So basically, resistance level is the level that sellers are waiting, and I would say buyers lose control when they reach to certain resistance levels. So for example, anytime you see that the price rejected and reversed, that is a resistance level. So this is number one. Okay, another obvious one could be here, this level. So, and also, just to make things a little bit more clear, we don't need to go all the way back, for example, here, to look at our trends, or I would say our key levels. We simply need, I would say 5 months, 4 to 5 months past is good enough to analyze the key levels and find them for you. All right, so this is one resistance level. This is another resistance level, and as you can see, this is the most recent resistance level. All right. Okay, so now that we know that these levels are our resistance level, what about our support levels? These are basically the levels that price rejected. Okay, so support is basically when buyers are looking for opportunities. And do you see any support level in this chart? Simple as that could be. Look, this could be one of the most obvious ones. I'm gonna use the green color for that. And let's add a text as well. And this is our support. Okay, this is our support, and I'm gonna use the same color for that. All right, so as you can see, price was moving upward, okay? At this position, it broke that price, came down, found support. The price was kept over that price range, and then it started to rally toward upside again. But when it reached to this level, if you can look at this level, for example, here, when the price get to this level, it start to come down to this support level. But as you can see, when it reached to this price range, it start to go back upward. That means that within this range, the price found its support one more time. Okay, so I hope that's clear, and let's see how it's gonna look in our candle chart. So look, our very first level was the resistance that basically we determined. So if you can see, price got to this level, rejected, start to come down, went up, again, it start to reject, come down, tested itself, and start to rally to our downside. And one more time, when it reached to this level, it come back up, couldn't go any further. In this position, you see that it created a new resistance level. So it started to rally to our downside, retested itself, and move to our downside one more time. But as you can see here, the price start to found a new support level and start to go up, rally down, retest it, and start to break eventually and come all the way here. So our lowest, I would say for now, our new, I would say, support is around this price. All right, so it's around 17,778. So I think it's a little bit difficult to remember these numbers. So for example, 16,586. It's a little bit difficult. How we can make it easier? We simply round the numbers. So how are we going to do that? So for example, if you go to look at the coordinates, it's 16,586. Simply, I would remove the 86, I will put 90 instead of that. Okay, 16,590. Or simply, to make it even more easier for you, you can simply change it to 16,600. This is way easier than remembering that number that we had before. So round the numbers, because usually price rejections happen within these round numbers. Okay, so here we have resistance, and down there we have support. Here we have another support. Sorry. All right, so here we have another support. So, as you can see, support, resistance. Very easy to determine them. Look, here in this key level, there are certain points when resistance simply switch to support. So look, in this location, we had resistance. Here, I'm going to change the color to red. So if you see here, this level was not support, it was resistance. But here, it switched and resistance becomes support. So this is how the market is moving. And why we need to determine these key levels? Because usually we would look at these levels and determine trading opportunities. But wait a second. Now we determined key levels in our daily time frame. But if we drop it to 1 hour, we would see much more, so many more levels than this. Let's go to 1 hour and let's see if our main levels make sense. So for example, the very top one we have. If you see the very top resistance that we have, when we go to 1 hour, you see 1 time, 2 time, 3 time, it rejected this price. And when we look at our support level in 1 hour, 1 time, 2 time, I'm gonna mark that for you guys so you could easily see what I'm talking about. 1 time, all right, I wanna use that more often. So, and we have another time, we have another time here, we have another one, we have another one. As you can see, simply there are so many locations that price started to reject itself. And why those levels are important for us? Because simply by identifying these support levels, we're basically finding buying opportunities. Here we had 1 buying opportunities and it went all the way up to our resistance. And as soon as it got there, we had a selling opportunity. And again, it would get to another support level and we could have another buying opportunity. And here we had another one that started to reject and it went up. So as you can see, we don't want to basically get into trade from everywhere. Simply, if I want to reset my chart, the very recent ones that we have here. Look how simple it could be. It couldn't be more simple than this. So for example, when we have, let's change it to red color. Look, one time here we had a small fake out, came down, tested, dropped. Again, it started to go up to that level, and around this price, it started to reject one more time and it rallied down. Simply, it get up, try to get close to this level and reject it one more time. So let's drop it to 10 minutes now and see what's happening. How 10 minutes would be easier for you to get into the market, to enter the market. So simply, as you can see, this level, in 10 minutes, it will simply show you down, went up, made a very important rejection that we could simply recognize it, and it started to go down. The next day, it started low, tried to go up. Look, very nicely. Even if you look at a smaller time frame, you would recognize these levels. Here, rejected one time, the price of 13,450, 16. We can simply round that number to 13,450. Look, this is a very good price movement range. Tried to get there, couldn't. Fake out, tried to get there, couldn't. Start to drop. Correction, start to drop again. Made another correction, start to drop again. So simply, this is how you recognize support and resistance level. Thank you very much, guys. I hope this episode was informational enough. If you liked today's episode, give me a thumbs up and start to subscribe to our channel if you're new. And also comment if you want me to specifically talk about something that you want me to talk. We can definitely do that. Don't forget to subscribe to my channel and don't forget to follow me on other social media. Elevation Trading team is doing its best to prepare you the very best and latest material in the market. Till next time, peace.